Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. So as always, what we do is go over both our opening and closing and or adjusting trades that we send out to our members. Now we obviously send out these alerts to our members live, and this video goes out to them the same night that we make the trades. But if you're watching this on YouTube or someplace else online, just understand that if you're watching this publicly, you're getting this video about 7 to 10 days after the video goes out to just our members. So if you want these alerts, you have to sign up for a membership at OptionAlpha.com. So today we had just one opening trade and two closing trades that we took off for profits. And again, the same mentality continues as we get further and further into March. Just like what we did with February expiration last month, is that between now and basically all the way up until about the last week of March for expiration, we'll start to take off just the profitable trades that show. Everything else that we put on, we're going to leave on working until it shows a profit and until the point at which we take that trade off. Now, if that means that we have to hold the trade all the way through expiration, that's what we're going to do. We're going to hold it all the way to that last week of expiration just to give the market enough time to have the cyclicality work itself out and potentially see a profit because we're trading the odds in this case. But I do want to go over the opening and closing trades for today. Let's start with this opening order for UNG. Now, natural gas is one that we took a loss on last month when we traded this. We traded an iron condor on natural gas. So really we took a loss on one side of the trade, took a profit on the other side of the trade. But this is another one I wanted to get into, and I was really hoping to get into it yesterday, and this is one of those orders that didn't get filled until really early this morning. So this is one of our first fills that we sent out, but it was the 26-27 call spread on UNG. So you'll notice we sold the 26 calls, bought the 27 calls to help finance that sale, and overall we took a credit of 31 cents per vertical spread. Now we sold 6 of these spreads, so it's a fairly large position, but we felt confident that natural gas is at least putting in a top, and implied volatility at the time that we sold these was very high on the day. Now I want to go to the chart here of natural gas just so you guys can see where it is, and it's had a huge run up, and whatever the case is, it doesn't matter. The reality is that people are going to start to take profits on this, and you can see that by these extreme volatile peaks that it continues to have. Every time it kind of peaks up here around 26.5, 27, we start to see the market sell off at these points because people are profit taking on their move from the bottom. So I do think we'll continue to move lower, and obviously we just want natural gas to trade anywhere below 26 about and close by expiration. Now when we entered this trade today and natural gas went higher, we actually got filled here. Implied volatility at the time we entered it was around 53, so that was the 53rd percentile. You can see it's already dropped back down into the 49th percentile, so at this point, it's still going to be a really good trade that we had on. We entered it exactly where we wanted it to be, and now implied volatility is going lower. If we can continue to see natural gas move back down to around 23 or so, I think we'll have a really good opportunity here to close out this trade after just a couple days, maybe even a week or so, and take a nice big fat profit on this trade. But again, it's just a really good trade for where we are in the cycle for expiration, and we did continue to stay with the March contracts just because this is really volatile, so we do expect to take this one off pretty quick. Moving on to the closing trades, we bought back a couple of vertical put spreads that we had, and this is something that we continue to do with our portfolio. So our portfolio is obviously comprised of a couple bearish trades, a couple bullish trades, some neutral trades, etc. And as the market moves in one direction or another, so in this case, as the market continued to run higher and be bullish, we're going to take off those trades that take advantage of that move in the market and leave on the positions that we need the market to move lower in so that we can have trades on both sides of the market and continue to roll off these profitable trades. Now, two examples of that are today with V, which is Visa, and then XOM, which is ExxonMobil. So with Visa, we had a 210-205 put spread that we sold for $1, and today we bought it back for 23 cents. It was only one contract that we sold, so it was a very small position, and we were just adding to our bullish position in the general portfolio when the market was going lower a couple weeks ago. But you'll notice that we again took about 70% of the potential, 77% of the potential profit that we could make. So there's no point in holding this Visa put spread all the way through March expiration. Visa made a nice move higher and implied volatility dropped as a result. So because of that, now implied volatility is at the 31 percentile, and you'll notice that up here in the top left-hand corner, even though I just drew my arrow over it. But you'll notice implied volatility in the 31 percentile, and as Visa moved higher, that obviously made our 210-205 put spread, which is here and here, start to decay in value. So there's no point now in holding this and kind of squeezing out that last little bit of profit. You got to take the trade off and move on. Same thing with ExxonMobil. So XOM, we got rid of our 92.5 90 put spread, and we sold that or bought that back today for 18 cents and made a $39 profit on the trade overall. Again, continuing with this whole theme of taking these trades off early once you start to see anywhere between 50 and 75% of the max potential gain on these securities. You want to go ahead and roll these trades off. And so this is really, we can't really expect anything better of our trade because we entered it back down here around the lows when the market was making a low. The market just continued to trade straight higher, and that's all we can expect at this point is that the market traded exactly where we want it to be. Let's not be greedy and assume it's going to continue from here all the way up to 100, and we're going to squeeze out that last 18 cents of premium. We want to be diligent and smart traders, and by doing that, we have an opportunity to take profits and move on to the next trade and kind of replace this trade with some other trades in the portfolio. So this is a huge move for Exxon. We don't want to jinx ourselves here and assume that it will continue forever. So again, hopefully you guys really enjoy these videos. Please add your comments and questions below the video. I'll get back to all of those tonight and tomorrow before the open, and happy trading.